So President Trump just signed an executive order that's designed to make it easier for your employer to offer you the option of investing some of your savings in what are called alternative investments, like private equity and private credit. Those have normally been the domain of institutional investors like pension funds and really rich people. The order is really just a first step. Don't expect to see big changes in your plan anytime soon. First, the Department of Labor and the SEC will need to revise their guidance to your employer to let them know what they have to do if they want to offer you these kinds of alternative investments. Second, once that happens, the employer needs time to digest those new rules and then go through a process to examine what new investments they might want to include. So why is President Trump doing this now? For years, the private equity market has been gunning for workplace retirement plans. It's more than $12 trillion worth of investments in that market, so it's potentially quite lucrative for them. But for investors, the potential benefit is that you will get broader diversification. Why? Because the private market has grown so much in recent years and the public market hasn't grown. But what are the potential risks? Until now, private markets have been less transparent, riskier, more expensive, and the market isn't, quote, liquid the way public markets are, where you trade stocks, bonds, and mutual funds. That's why some critics, like Senator Elizabeth Warren, who's a top Democrat on the Senate Banking Committee, has been very vocal about her concerns opening up these markets to retail investors like you and me.
Private equity billionaires want to make money off you. And I got some serious questions.
So what's the bottom line for you? Your 401k plan may be changing, but only if your employer decides they want to offer alternative investments in the plan.
Okay, this is a big time game changer. And I think a lot of people really are not aware of exactly what's going on. And I am a little worried about some people out there right now that feel like they're behind in the 401k and they start investing into some of these risky investments. So I want to just explain it a little bit so people really understand what's going on here. Now, first of all, these private equity firms and these private investments, these are private entities that are not in public, right? So no stocks, none of that good stuff. These are people who do private lending, private real estate, and these are held for the wealthy, for the extremely wealthy people. Now, of course, people are going to think, well, if wealthy people invest in this, then I should, right? Then I should invest in it. But I caution so many people out there because there is a huge risk that you do not know you're partaking in. There is a huge risk. I know people are going to start seeing it in their 401k and they can see, oh, wow, I heard that this place does a good return, whatever. But remember, this information is not public, so it's not going to be all over the news. You're not going to know exactly what the returns are for most of these private equity firms. So the lack of information is very, very limited, which obviously means you're putting your money into a risky investment. It doesn't mean you're going to lose money, but you're putting money into a risky investment. And that's why I feel like most of these employers are not going to offer it. Because listen, I highly feel like you should keep your retirement money. I don't want to say safe because the S&P 500 does have some risk, not a huge amount of risk, but does have some risk because investing has risk. But I highly recommend people just put money in an S&P 500 index fund and that's it when it comes to retirement. When it comes to retirement, hear me out on that. When it comes to retirement, if you want to have some fun with some private equity, you could do that on your own in your own brokerage account. But anything that you're dependent upon for your retirement, you should not put in risky investments. Because guys, also, when it comes to private investment, you want to do your research, obviously. And if you want to do it on the side, go ahead. But you need to understand this as well. But a 401k, right, the funds that are in there now, they're not so risky, they're safe because the people understand it's for retirement. But you need to understand for private investments, a lot of your money is locked up and you cannot pull it out. Sometimes you need to have a 2 to 5 to 10 year commitment because these are new projects or new businesses they're getting into, and your money that you're putting up, your capital, and obviously you're going to get money back of return, needs to sit there for a bit. You can't have people day trading in and out with that. No. This is not what this is about. It needs to sit there in a bit and your money could be locked up. So for everyone now that's like struggling and thinking, oh, I want to take a 401k loan. Oh, I want to do a hard withdrawal. I mean, obviously you shouldn't, but if shit hits the fan and you might look into that, with this you can't. With this, you cannot. So people really need to be aware of exactly what they are investing in, right? And that's why there is a lot of pushback on this because it's like, wait a minute. Anytime these big firms want a piece of the pie, you gotta be scared. Because how many times you've seen a lot of these firms go belly up? And now with this huge amount of money coming in through 401ks, do we really trust them? Are we really gonna trust companies that are not that transparent with all that money? And then, hey, you lose your money and there's no consequences really because they're not part of the SEC, right? They're not regulated as heavily as other funds are. It's a very, very, very big risk. And what scares me when Trump signed that executive order is people are just not going to pay attention. But my opinion, I feel like most of these companies are not going to let you invest in it. They're just not, because they recognize it's so risky. But even if they do, even if they let you invest in it, guys, you need to do some heavy, heavy, heavy research on your own. You certainly do. You cannot just put your money there without understanding the risk that's coming with it. The money is going to be locked up. There's a lot of information that you need to know. But at the same time, of course, there's a huge opportunity to make so much money as well. But you just have to know exactly what you're investing in. You can't invest in stuff that you have no idea about. All right, none whatsoever. You have to know exactly what you're being invested in, how long your money is going to be locked up, how is the return that you're getting from this company, which once again, like I said, is very, very hard to get your returns on these companies because after a project is done, your money is not locked. Who knows how long your money can be tied up? But you certainly need to pay attention before you make that decision. So guys, drop a comment down below. Let me know. How do you feel about these private equity firms getting involved with people's 401ks? Do you think it's a risky thing? Or do you think since the billionaires do it and the millionaires, that's most likely one of the best options for you to have? Drop a comment down below, guys, because I would love to hear it. At the same time, hit the like, leave a comment, and subscribe. Catch you guys in my next video. Peace.